We are looking at the Medley industrial submarket where we have 992 industrial properties, 15 that are actively for sale, 12 that have closed in the last 3 months. I guess that would mean that we have about 3 months left of inventory, 115 that are actively for lease, that is spaces, and 50 spaces that have been leased up in the last 3 months. I want to go through this a little bit differently, even though we're looking at the asking rent at $19.23 a square foot, which is up slightly, just under less than 1%, $280 on the average sales price, just under 3%, and the market cap at 5.9, which has been flat. I wanted to take a different spin and break this down into size per square feet so we can see some of the differences. We broke it down from 0 to 5, 5 to 10, 10 to 20, so forth, all the way down to 500,000 square feet. Starting with the vacancies, you can see that even though the average is at 9.3, the smaller stuff has a 1.8 and works its way up to just under 16 at 100,000 to 200,000 square feet. On the asking rents, the average is $19, but going from the smaller space, the 0 to 5, you can see that's just under $25 a square foot, and it works its way down to just over $17 a square foot on the higher properties at 200 to 500,000 square feet. Sales price, the average is $280. The average from there, it goes $400 a square foot on the 0 to 5,000, and it works its way down to $243 at 75,000, and a little bit higher on 200,000 square feet at $270 a square foot. And cap rate's about the same thing. Average is at 5.9, and we start with a 6.4 on the smaller product and working our way down to 5.7 on the larger product. As far as time on the market, you can see that the leasing is taking, used to be 4 months, now we're up to about 7 months, and again you can see that that is probably attributable to the larger stuff that is taking so much longer to get filled out. As far as the dollar per square foot, the average at $280, that is up slightly, and you can see here that the trend line, it is flat from about the end of 2025 through 2026 is about to remain somewhat flat, and then somewhere in 2027 it will begin its upward climb, moving probably over the 3% increases per year. As far as the best performing product, at one point the 1 and the 2 stars are the highest performing by star rating for sales price. And lastly, the cap rate's at 5.9 on the average, which has been flat for the last year. You can see here again the trend line is now it's extended its way out in this area. Pretty much it jitters a little bit through there, 26 and 27, even through 28 it's a slight decrease, and then in 29 even there it kind of stays flat. As far as the distribution, anywhere from 4 to 8. So again, we did see some of the smaller product that was the best performing. And as far as the cap rates on the 1 and the 2 star, now that tends to break it down by the quality of the age of the building, not necessarily the square feet. So the 1 and the 2 star still are performing best in terms of star or cap rating. Now lastly, of the 58 transactions that did take place last year, only 17 were actually listed. And again, properties that sell off market tend to sell for 20 to 30% less than market value. Again, these are statistics coming straight out of the research. If you are thinking of selling, reach out to us. If nothing else, we can give you a valuation, let you know what your property is worth. And if you don't want to deal with the headache and the time of getting all of that out there and reaching out to those different people and marketing, again, we can at least show you what that would potentially look like. That's your Medley industrial submarket.